Hey, Saretsky here. Welcome back to the show. I want to touch on a few things that are, I think, of importance today moving forward, and then I want to walk you through what's happening in the Vancouver real estate market. There's a lot of confusion there, so I'm going to unpack that all for you. We have the Trudeau government, its budget announcement coming out in the next couple of weeks here. So they're dropping little tidbits, particularly around housing, because they know they're getting decimated in the polls. The election's about 18 months away, so it's desperation time. And so there's a lot of policies that are going to be announced, not only today, but in the coming weeks. I will be here. Come back to this channel. We will do a full deep dive video unpacking all these policies, some of which I think are going to be good policies, some of them I think which are completely irrelevant and terrible, stupid policies, such as the Renters' Bill of Rights, which I did a video on last week if you want to go listen to that one. But just this week, we had $6 billion towards infrastructure spending for cities and provinces that sign on for their sort of requirements, which is like one of them is they want to make fourplexes a rite of passage on all single-family lots, similar to what the BC government has already done here in BC. And so basically, the city says, or province says, okay, we'll go along with this mandate. Then basically the feds will stroke them a $1 billion check or what have you to go and spend on upgrading their sewer and infrastructure. So there's some nuances there. We'll do a deeper dive on that. They just allocated another $15 billion to CMHC rental construction financing program. That's another big spender. We've got rumors here, and these are credible rumors, people that I respect in the industry saying there's better than a 50-50 chance for the feds increasing the amortization limit for first-time home buyers from 25 years to 30 years. Okay, so right now, if you're a first-time home buyer and you're only putting down 5%, 10%, 15%, if you're putting down less than 20, you have to go through CMHC, basically. You have to be an insured mortgage, and the maximum amortization is 25 years. So there's rumors that are credible that they're going to push that to 30 years. And again, we'll get into the semantics of if that actually plays out. So we'll do a deeper dive on the budget announcement when all these policies are finally kind of set out. But that kind of takes me into the next point, which is really what's happening here in the Vancouver real estate space. There's a lot of confusion, right? We came into this year and it was like, well, listen, hey, like interest rates are supposed to come down. I heard that Bank of Canada is going to be aggressively cutting interest rates this year. I think at the start of the year, I think markets were pricing in 5 cuts from the Bank of Canada. Market got a little bit hyped up on that. Low inventory, prices started to accelerate. And so, if you look at the stats today, right, people email me and say, what's going on, right? Sales are down, new listings are up, but prices are up. What's going on? I don't understand this. And this is what I love, right? Is people that, they don't do this for a living. And so they'll just look at a chart or they'll go follow a few home sales or look at BC assessment values and they'll just draw a conclusion. This is a very nuanced market. This is as someone that does this for a living 7 days a week with a successful team in Vancouver. It's a tough market to navigate and price properties. What you're seeing is a pretty large divergence today, actually, between the single family market and the condo market. So sales right now across the whole picture, right, all property types are weak. They are weak. The volume of sales is we're running sales right now for the month of March are 28% below the long-term 20-year average, okay? Think about how much our population has grown over the last 20 years, okay? This is not like a strong market from a demand perspective, but the issue is on the other side. It's like the inventory side, because you kind of have both. So new listings are 11% below long-term 20-year averages. Inventory, though, this is where things really diverge. For single family, they remain incredibly low. In fact, you're seeing most of the detached entry-level houses today, a lot of them have offer dates. There's offer dates. There's people out there bidding. Yeah, it might be crazy, right? Mortgage rates, 5.2%. Who's bidding? It doesn't matter. People need to move. People have to move, want to move. And so, mortgage credit is running incredibly low. It's still very punitive for people to get up and move. And so there's not a lot of turnover, but there's still people that have to move. Like life moves on, right? Not everybody's just obsessed with this channel and follows the bond market. Life moves on. And so these people that are out there trying to move, they are having to compete in a low inventory market. And that's why you're seeing prices edge up in that segment. The same can't be said for the condo market, particularly in areas like downtown Vancouver, which really haven't recovered since the pandemic. And so the condo market, though, keep in mind, right, the inventory levels are higher, so the demand is relatively weak. The new listings are a bit more elevated. The reason here is just investors. You think about all these pre-sale condos that, coming for completion, investors want to liquidate, right? It's like, well, when they bought it, they ran their numbers, could have cash flowed, breaking even. Today's rates at 5%, like you're losing. I've had stories, conversations, people calling me up and say, hey, well, I want to close in this pre-sale. I run the numbers for them. I said, well, they say, well, maybe, if I can't get the price I want, maybe I'll rent it. I said, okay, well, based on what you're telling me, I'm running the cash flow numbers for you. You're going to be losing $700, $800, $1,200 a month. How long are you willing to sit on this property losing $1,200 a month for? Let's have an honest conversation here. And so this is why you're starting to see a lot more inventory building in the condo segment. Is because, again, the investors, the cash flow numbers just don't work well. Not at today's mortgage rates. And we'll get into mortgage rates and I think where I see those going in the very near term. But this is the dynamic that's playing out in the condo market. So this is where you're getting more inventory. And I would argue a little bit of pressure on pricing, a little bit. But overall, I'd still say relatively balanced market. But this is a market that I do still have some concerns about because I think the investor segment is going to be challenged. And you think about the investor segment, only that, but the rent controls and the rent freezes from the BC government are incredibly punitive, right? I mean, every which way you turn, the BC government is tightening the clamps on investors and making the tenancy laws more preferential and more favorable for the tenants. And so as a landlord, right, it's like your mortgage. So what you're seeing is costs are blowing out, right? Your mortgage interest cost is blowing out. That's probably your biggest cost when you're operating a rental property. Your strata fees are going up because cost of maintaining and running a building is going up, right? Cost of materials, cost of labor, that's going up probably a lot more than CPI inflation is telling you at 3%. Cost of insurance is running at probably 7-8% a year. Property taxes, the cost of owning and operating a rental unit today are rising far greater than what the BC government is giving you in a rental allowance of 3.5% rent inflation to pass through the tenants. So it's becoming less and less favorable for investors to play in this market, and that's why they're exiting, putting units on the market. And so we'll see how that kind of plays out. But on the interest rate side, right? I mean, one of the narratives that I heard so much on all my conversations with sellers this year was, well, if we don't get our price, rates are supposed to come down. So we'll just kind of hang out. We'll wait. It's going to get better. Rates are coming down. Like all I heard this whole year was rates are coming down. And I always did my best to kind of push back on that, which was, even if your thesis is right and the economists are right that, rates are going to come down, right? Like 5 cuts were expected from the Bank of Canada this year. That changes your variable rate mortgage. That doesn't change your bond yields. The bond market is not really in control by the central bank. So the bond market plays on a whole different ball game. The bond market looks at inflation, it looks at government deficits, it looks at the economy, it looks at the whole picture and decides where to price these yields. So Bank of Canada cuts 5 times. That brings your variable rate mortgage down from 6.5 down to 5.25. Like that's still pretty high. 5.25 is basically where your fixed rates are today. So my point being was like, rates coming down might move the front end of the curve. It's not necessarily going to move your 5-year fixed rate mortgages down. And that's been really my thesis for the last couple months, really since we got into this year, where everyone was just saying the exact same thing. We just had CIBC's CEO here coming out and saying, He's not expecting multiple cuts this year. So all of a sudden, the conversation is starting to change. And starting to change really not because Canada, because let's be honest, the Canadian economy is not strong. Inflation's actually coming down quite a bit. I would say, the average of the Bank of Canada's 3 core measures is running at like 3%. Like, it's pretty much within target for the Bank of Canada to arguably start cutting rates. But where the problem is, it's in the U.S. The U.S. data remains resilient, and this is keeping the bond market, not only in the U.S., but in Canada, it's keeping yields higher. And this is what we've seen over the last 4 weeks, right? As we saw ever since over the last 4 weeks, the U.S. data continues to come in stronger and stronger, and that's been pushing bond yields higher here in Canada, where your fixed rate mortgages are once again on the climb higher. So, again, despite the narrative coming into this year, rates are going down. Rates are moving higher right now for fixed rate mortgages in Canada. Okay, so they bottomed about 4 or 5 weeks ago. And again, try to predict the path, 3 months from now is going to be it's going to be challenging. But to expect them to be materially lower, I think is not prudent. And so I think that this is the thing that we just have to work ourselves in and say, how do you navigate in this environment today? Like I said, turnover is still incredibly weak. I think if you do get a change in the inventory picture, that can start to change the pricing dynamics in Vancouver, particularly for these single-family houses. But let's be honest. I mean, the single-family houses have a lot more of an underlying bid today than the condo market because the government's coming out with all this upzoning, mandating fourplexes across the entire province, allows so much potential redevelopment. They've created these transit-oriented density areas now. You're within 800 meters of a SkyTrain station or 400 meters of a bus stop. Like you can build up to 20-story towers, depending. You know what I mean? Like there's all these confluences just pushing towards higher density and underpinning the value of single-family dirt. And so it's a much different conversation today than again, like I said, parts of the condo market. So long story short is that the market that you're in today really just depends what you're looking for. What are you buying? What are you selling? This is not a normal market that people are used to. I guess I should say it is more of a market, but the market that people are used to in Vancouver and in most of Canada is just straight line up. At least over the last, 5, 6, 7 years. But, things are changing. You have to navigate this new environment today where mortgage rates are higher than people expect. Rental properties no longer pencil. And so, you're going to shake out some weak hands and there'll be opportunities for others. And I think it's going to be this market that we continue to obviously navigate here together. Hopefully this brought some value, some education for you. But like I said, I will do a deep dive on the federal government's budget announcements over the coming weeks. Look for an in-depth video on that. The Bank of Canada is out next week with the rate announcement. Again, I suspect you'll see more pushback on rate cuts from the BOC in the announcement next week. And you'll see that slowly but surely, these rate cuts across most of the world are slowly being pushed further and further out. And so I would just advise people to, act accordingly, act with prudence. Hope is not a strategy, and hoping for rate cuts is not a strategy, whether you're looking to buy or whether you're looking to sell real estate. So as always, hope that helped. See you next week.